Hi guys, welcome to Boom Traders. This is Tintin and they talk about pullback buys. Now before we jump in, I'm just going to go over the agenda. We're going to start off with some definitions about the concept. We're going to look at how the pullback buys are used, and then we're going to go into the theoretical examples. From then on, we're going to look at the two sets of entries, some real life examples. I'm going to give you a bit of an advanced caveat about how to use this setup, and then we're going to look at how it can be used on the short side. So let's jump right into it. Now, before we start off and get into the technicals about what a pullback buy is, I want you to just take a note that when we look at these things, when we look at the little tiny details about a setup, we always need to put them into the larger perspective. And the larger perspective here is that we assume that we are already in a stage 2 uptrend. If you have watched some of the other videos, if you have read Mark Minervini's books, this is the stage 2 uptrend is referred to as the non-negotiable criteria. We don't go and we don't jump into any setups without that. So as I said, stage 2 is assumed all the way throughout the video, and we always want to put that into perspective. Why do we look for stage 2 uptrends? Well, check out the other videos to see why it is so important. But in a nutshell, this is the place where we can expect institutional support. And this means when funds are piling up into the stock and pushing the price up and up and up. These are kind of the highest probability times when we will be getting an upward movement into the stock. So here's an overview of pretty much most of the setups that Mark Minervini teaches and that we're covering here in our short series videos. And this is the chronological order of the setups. Now, the idea is to show you all of these, and this graph is because it really hammers the point that there is not a single buy point within an uptrend. We're basically looking at all these places for us to jump in, add into positions. Maybe we've missed something and we want to jump on it later on, and we're getting additional confirmation. We're going to get more exposure into certain stock. These are the places where we can do that. So the 3C we have covered already. So this is kind of the very first, or also referred to as the turn. It's the very first place where we advise that you can start jumping into a stock. Again, assuming stage 2 uptrend. So we're not bottom fishers. We don't buy the lows. We're actually nearly always buying within 10 to 25% of the all-time high, or at least the 52-week high. So the 3C is the first setup. From then on, we have a candle. So in essence, this looks something like this. You've seen the cup and handle pattern many times, and William O'Neill covers that quite well. And the next thing you have is the pullback buy here. We have a cap, and usually we can also trade the first pullback to the 50-day as well. As I said, the whole idea here is that we don't have a single buy point. We have a bunch of techniques, you have a bunch of tools for you to jump into the trend. Now, we're going to look at something that we call left-hand side compression. And I'm just going to show you two things. We'll hear us, especially in the Boom server, talking a lot about needing for stocks to develop a right-hand side. And sometimes we're getting a lot of questions, what do you mean by that? What's a right-hand side development? And so on, especially people which are new to trading and haven't been exposed to the breakout teachings of William O'Neill, the Investor Business Daily, and Minervini. Now, we do not operate into this left-hand side compression because, as you can see, it's very V-shapy. So we don't buy here, here, or here. The stock has not proven itself, and we operate from an assumption that every stock is guilty unless proven itself to be a good buy. Now, we have also what's known as time compression, where the stocks kind of shoots off the lows right up and doesn't have enough time for it to form a base. Why do we need this? Basically, base formation is one of the patterns that we see when we have a shift from weak hand holders to institutional holders. If we don't have that, we have a bunch of weak holders here, and the weak hand holders are basically you and me, the retail investors who are not in it for so much for the long term and are actually much easily shaken off the price trend. We want to piggyback on the institutional buying, which is the place when stocks kind of advance the highest percent-wise within their lifetime. Now we need to develop these right hands, and we need to develop much more symmetry. And if we see here this at the bottom, we see that we're kind of only halfway through like what a normal kind of half cup would be. And for us to make symmetry, that means we need to grab some time. Now, as you can see, that stage 2 actually refers to this part here. I'm going to show you what this looks like. So this is not what we want to see. What we want to see is something like this. Basically, we have the downtrend, which is the same as the one here. We have the shoot up, but then we are getting at the point whereby we're hitting supply from above and we're meeting from the bottom. We've covered that in some of the other videos, so make sure you go and check those out. From then on, we're basically breaking up the downtrend, which is happening here. And from then on, we're getting a few VCP characteristics, and we can start buying these. Again, these will be the buy points that we've covered previously here. So it's kind of the same thing. We have downtrend, we break the downtrend, we don't buy the break of the downtrend, but we buy the first confirmation of a new uptrend. So that's very important, because sometimes breaking of the downtrend might just mean we can develop a new different downtrend. So that's why it's important for us to have an uptrend confirmation, usually confirmed with the stage 2 uptrend. So from then on, I'm going to show you practical examples that it's from Mark's books. And the way we're going to do it is like an exercise. We're just going to look and we're going to pretend to see it in real time. And then we're going to see when we have developed this kind of right hand compression and when we have not. The important thing why we're doing it this way is because we can role play that we're sitting in front of a computer and seeing this real time today. It's very easy when you are kind of looking at a stock to have a hindsight analysis and say, oh yeah, I should have bought here. But when you're doing it from the left to the right, it's a much different story, and that's where a lot of new traders are actually getting stuck and getting confused. So henceforth, if we just move forward, we see the stock is starting to go down. We see the 50-day into a downtrend. We see this first kind of pullback and reversion up. Do we buy here? We don't buy here, because as I said, the stock is still in a downtrend. Maybe it's kind of just breaking this, but it hasn't proven the new uptrend. From then on, we continue going down, it reverts back down. It's kind of forming this kind of pivot area. We're getting a bit of a pullback here, but are we buying here? No, why not? Again, the stock is in a downtrend. Even if it breaks a channel, it's still broken a channel. We haven't been getting any up confirmation, so we don't want to apply the pullback buy technique here either. From then on, we continue and we're getting another kind of drift up and going down. We don't buy this as well for exactly the same reason. Now let's see what's going to happen here. We continue to go down. Now here we're getting again this downtrend. We're getting a break. Now let's see what happens afterwards, after this break of the downtrend continues. We're shooting up, so we have the break, and now we're kind of showing first signs of a new upward trend. We again assume, and this has been, that we are in a long-term stage 2. This breakout here is also happening on very large relative volume compared to what we've seen in the past. So we have this downtrend, we break out, and now we have this new uptrend. And now this is the first place whereby we can see this volatility contraction and we can see this breakout from here. You see, it's a completely different story to buying here, here, or here. And I'm just gonna fast forward a bit. Basically, you get this opportunity here. It's within this base formation. From then on, you're gonna have two more opportunities. In essence, this is this symmetry that we look for. We don't have symmetry here. We don't have symmetry here. We don't have symmetry here. But we do kind of get a symmetry the first point here, and especially here as well. So just be governed by this kind of cupping drawing underneath, and you see where those buying points are and see what the stock is moving afterwards and what it's doing prior. So that's interesting and important point to get across about right hand side development. Now the actual definition about a pullback buy is basically after a breakout of the stock, like we can get one here, we can get a pullback buys like here and here on about 3 to 5 days of a downward action. So you can get up to a week of retracement of the breakout, maybe taking out the breakout level, and this is a place where you can get additional buying opportunity. I would say somewhere between 3 to a week, no more than 7-8 days. We want to get this tightening around the pivot point, and from then on here we want to get a move up. What's important here is that we get supportive action on the day that we close up. So we're getting 1, 2, 3 days down, a supportive action here, and we want to see basically taking out of the high here on the next day. The important thing that you should not forget is that on this little pullback down, we are not tolerant of any violations. So we're gonna make a separate video about what the violations are, but just in a nutshell, if you have to look for one thing, make sure that you don't get low volume out, high volume in kind of thing. So these days when we go down, we want to see a dry volume and preferably very supportive action in terms of volume and daily close range, this pullback buy. Now we're gonna cover further on in the video how we enter those, and we're gonna get into the nitty-gritty about the pullback buys. This was just a general overview, and we're gonna cover 2 different setups. We have the 2-step entry, and then we have the 3-step entry. Now the 2-step entry is very textbook-like, and this has a bit of a higher probability of working out. The 3-step entry also works very well, but it is more aggressive. So you can decide which one to employ based on where we are in the general market. So if you are still in the beginning of a new bull market coming off of a bear market, you might want to get into the 2-step entries only. Whereas if we are kind of in a confirmed, let's say 1 year in, roaring bull market, you can be a bit more aggressive and employ this technique. Now, for the guys who are watching the free video, we're gonna drop it off here. I hope it was about 10 minutes that you got some knowledge about what the pullback buys are. And for anyone who's a premium member in our Discord and has the role Insider, jump into our educational section, and we're gonna cover off with probably about 4 times more content about what to get it, some theoretical examples, real life examples, and also looking at the short side. So thank you for guys on YouTube, and for anyone on the Insider, let's jump right into it.